Everybody. Today I want to talk about one of the comments that was left on my previous videos, as I thought the user had brought up some good points. Was a good example of taking a tax position and supporting that tax position with specific IRS code and specific statutes that were mentioned as referenced in that comment that he had made. So I thought it was a good example not only to respond to it, but as well as to use it as an example of taking a tax provision and a tax position and supporting that position. Again, I am a CPA with over 2 decades of experience, and this is through what I believe, in my professional opinion, is the best way. It doesn't always have to specifically be or have to agree, which is kind of where I'm going at with this video. So I'm going to go on ahead and read the comment that was left on the video, and then I'll leave a description as well. So anyone who wants to watch that first video I made in regards to solar credits, more than welcome to watch it. So the comment is the information at 3 minutes and 8 seconds to 3 minutes and 40 seconds regarding the taxable year to claim the tax credit is not correct. Those 32 seconds are generally discussed turning on the system, which is basically the placed in service date referenced by 26 USC section 25 DG. So, however, that is not the date for when you figure out the taxes year however, that is not the date to figure out the taxable year to claim the tax credit. Rather, the law states the taxpayer gets a credit for the year which the expenditure is made. The law then clarifies for people living in a home at the time of installation, expenditure with respect to the item shall be treated as made when the original installation of the item is completed. And then again, he refers to the USC section of the actual statute again, and then he's also referencing to the form 5695, which is the actual form that you utilize to claim the credit, as well as stating about installation. So again, just my comment back on him is I think his standpoint and his stance is well researched, and I think based on what he has there, as long as he has the documentations to support it, I think that he can claim the credit in the year that he considers the installation complete. I think the question comes down here is really it's questionable in relation to the installation. When is the installation considered complete? In my opinion, the installation is considered complete when all components of the system are done, not just the panels installed on your roof. All inspections are done, the system is turned on, the system is operational. That's when my opinion is when the full contract has been completed. In addition, that's when I would suggest as well is to make your final payment on that system. So again, using his specific example, he's saying installation, so assuming that he means that when the panels are actually installed on the roof, not necessarily inspected, then he would also go on ahead and spend that money. So let's just keep in mind that taxes are based on cash basis. So as long as that money left his account and the panels were installed and he was satisfied with the contract, then he can go on ahead and take that credit in that particular year. So really you only run into this issue if you're installing panels close to the end of the year. If you have an overlap or you have a delay with the building inspector from your local county or municipality, if you have a delay with your local utility company to inspect the system and turn it on, that's really the only time that it'll probably happen. Or if you install the system in December, you might have an overlap of the year. But again, it's all really going to be dependent upon your contract, dependent upon the support, and dependent upon the documentation that you have. I think that both of us are essentially saying about the same thing. Because like I said, in my viewpoint, if I'm signing a solar contract, I'm going to sign a contract and I'm not going to pay it until that system is fully operational. Vice versa with anything else that you purchase. Chances are you're not going to make a final payment on, you're not going to make a payment on, you're not going to pay for a car before you actually have it in your possession. Similar, because it's solar systems are expensive and whatnot. So I would say that if you're making a payment on the system and the system's installed and the panels are put on your roof, then go on ahead and take that credit in that particular year. If you do have an instance of an overlapping year, it's a matter of what you have support and documentation to support. So if your documentation, the contract and whatnot supports that the system was installed and you can substantiate that in the event the IRS challenges it, then by all means, you can go on ahead and take that credit in the earlier year rather than the latter year. I also think that paying for the system plays a role in it as well. So if you take a loan out, generally that loan's not due for 60 days. But again, you can just base that off of, if it's a loan, you can base it off the contract date that they stated the installation is complete. Usually you get some sort of a letter saying your installation has been completed. So again, depending upon your specific solar company, your particular circumstance, whatever your documentation states would be what I would suggest that you take the year in which you take that credit. And This hasn't been something that's been heavily scrutinized by the IRS yet. Not to say that it won't be in the up and coming future, as there is multiple years left remaining, on this. So this may very well be something that ends up getting scrutinized. As like if you look back to some of the other initiatives that had gone on, a lot of the COVID stuff ended up becoming a high risk, and there's been a great deal of fraud behind them. So this could be something that it could be subject to a desk audit. Which basically would mean that the IRS would send you a notice and say, hey, send us proof that you installed solar panels on your roof, in which case you can send them the contract from the solar company, certifying that the panels are installed. And like I said, as long as the date is substantiated, you should be good. In addition, I don't foresee the IRS being too much of a stickler on what year you claim the credit in. At the end of the day, 30%, it's 30% until year 2033. So as long as it's the 30%, I can't really imagine them coming after you and saying, well, you should have cleared, instead of claiming it in 2024, you should have claimed it in 2025. I just like to minimize being a tax professional. I like to minimize having touch points with the IRS because it can be very difficult, especially when they're short staffed the way they are. So you can sometimes struggle to get in touch with somebody over there. And a lot of times you have to write letters and snail mail items to them. So I always like to exercise on the side of caution and, minimize my touch points with them. So by exercising a side of caution, I say install it. I say it goes into service. Whenever it's fully in service, fully inspected, that system is on producing electricity. That's the year which you take the solar credit. Now, if in this particular situation where the commenter had posted, say let's just use the example that he installed it on his house on December 15th, and the system was installed, the panels were on the roof, it was ready to go, but the system was off. So it was off because it was pending final approval from his local municipality, and it was pending approval from the electric company. Electric company approved it, say January 15th of 2025. However, the customer paid for the system on December 16th, once the system was installed. So the power company was up and running on January 15th. Customer's contract states it was installed and up and running in December 2024. I would say it's okay for him to take the credit in 2024. Again, like I said, there's gray area to tax law. It's up to interpretation. And I think that's really what my biggest component is here, is that the interpretation here is, well, what is the definition of the install date? Is the install date the actually specific date that the panels go on the roof? Or would the install completion date be the date that it's been inspected by the town, approved, been inspected by the power company, approved? I would say all three components have to be met for an installation date to be completed. And that would still be the same thing. If I paid cash for a system, I wouldn't want to pay cash for it until it was finally installed. But again, kind of taking this, bringing this back around, taking a tax position is important. It's important to take a tax position on something like this, whereas, you research the law, you research what it is, and you come up with your own interpretation on it. And if you're able to substantiate it, odds are the IRS is going to go with you. So the key component here is being able to substantiate your position. So substantiate it through references to laws, substantiate it through backup documentation and support. And as long as you have those components, usually the IRS will keep with you. Again, it'll be dependent upon who you get as a particular IRS agent, but a lot of times they will end up sticking with you. So in case people don't know, is that IRS doesn't have to prove to you that they owe money. You have to prove to them that they owe you money. So pretty much what that means is by filing your tax return and saying that you have a refund due, that's proving to them that they owe you money. However, they do have the ability to go back and audit you through multiple different channels. They can just request for backup support. They can do a full-fledged audit and say, well, we're going to look at everything. We're going to come to your home and look at it. But typically for individuals, it's just a desk audit. So a lot of times we'll just say, hey, you took this credit. So in this case, a solar credit. Send us a copy of the contract to prove that you actually put solar panels on your roof. You do that, then, you should be pretty much covered. And like I said, if there's a little bit of a discrepancy of getting panels installed in December versus in January, and you took the deduction 24 versus 25, I don't think that they're going to necessarily hold you to it, disallow it one year and then allow it the next year, like basically give you, make you pay it back and then again refund it again the following year. I think they're just going to let any reasonable person would just end up letting it slide. So I think it's It's a good argument's sake, but I think in reality, I think either which way you slice it, I think you'd be okay if you have an overlapping year. But for vast majority of the systems, you're not going to come into this issue. Again, I appreciate the comment, and hopefully you guys found this video helpful. Hopefully you can like and subscribe to my channel, as well as leave any additional comments below. Happy to have a discussion about it. I think it's definitely I always like to hear other people's point of view, and something. This was a great comment. I thought this particular viewer put a lot of time, and I appreciate the time and thought that he put into it. And he definitely knows his tax stuff. So thanks again, and hope to see you guys soon.